Hi traders, this is a daily forecast on Euro-Dollar. Today is Thursday, October 14. This video is brought to you by Finteria Markets. Please check our website for more information about the company. On the website, you will find plenty of useful information, including analytical tools, educational materials, articles, and online courses, as well as all information about trading conditions. We offer one of the best spreads in the market, and our spread on Euro-Dollar is below 0.1 pip most of the time. So let's start our analysis. I'm going to use winners and losers. It's my favorite widget that really helps to make sense of all the noise that you see in the markets. So here I'm going to use the second widget, which is called currency strength. It's also available as an independent widget on the website. You can find it under section market info and currency strength. So here I'm going to choose last 24 hours, and we will see which currencies are the strongest and the weakest over the last 24 hours. So here we see that two currencies are the weakest. It's the Japanese yen. So basically it performed really bad against the market, fell by 0.43%. The US dollar is the second weakest currency. And we can see very interesting price action behind the US dollar. We saw that the US dollar has increased in the beginning. It was actually right after the release of the inflation numbers, but then we saw a broad-based weakness of the US dollar. So there was a sharp reversal and the US dollar fell across the market, also across commodities. Speaking of the strongest currencies, I really like the performance of the Australian dollar, and we see that the Swiss franc is one of the strongest and it's gradually appreciating. So we can definitely say that there is no any risk aversion in the markets because we see that safe havens are at the both ends of this instrument. So safe haven currencies are the US dollar, the Japanese yen, and the Swiss franc. And we see that the Swiss franc was pretty strong yesterday. So commodity currencies were performing really well. The Australian dollar, it gained 0.32%. The New Zealand dollar grew by 0.23%. So let's briefly speak about the economic data. Yesterday, we had the inflation number, and actually the inflation is getting really hot. The yearly value came at 5.4% instead of 5.3%. And the monthly inflation was also higher. In general, the inflation is really becoming a concern. Yesterday, we also had the FOMC minutes, and the minutes showed us that some members of the Fed are expressing their concerns about inflation. So in my opinion, inflation is going to be more and more important, and the market reaction will be very strong. This was the first time we saw a sharp reaction in the markets. Before, the market was actually ignoring the inflation data, because the members of Fed were kept saying that the inflation is transitory, but in my opinion, the inflation is going to be more in the focus of the market in the coming month. So generally, the inflation data was positive for the US dollar, and we actually saw a really positive reaction in the beginning. The US dollar appreciated. Also, I wanted to show you the SOFR futures. This is the contract for December of 2023. So basically, we saw that inflation expectations ticked higher. So kind of like the news is very positive for the US dollar. But despite this fact, we saw a sharp sell-off in the US dollar. And this was across the market, across different asset types, including commodities. So why actually it happened? In my opinion, the market was very much long US dollars, and probably we need some healthy correction in the markets. Sometimes when the situation is getting very mixed and very choppy, the best thing we can do is just to zoom out and see the tendency in general, what is happening in the markets. So I suggest to review the charts once again from the daily time frame. Here I have the chart for Euro-Dollar, and we see that we're trading in this triangle. We broke out the support line, and we are between key levels So this blue line, it's the line of the triangle, and the line below is 115. This is a level from pandemic era, from March 2020. So in my opinion, the trading is going to happen within these two key technical levels. We're going to stay here for some time, definitely for one month, maybe even more. So here I also have another green line. This is the trend line, and we can actually see how far from this trend line we are. So this trend of the US dollar was pretty strong. That's why basically the market was in general very much long US dollars, and we see a really sharp sell-off in general. So yesterday, if we also check the situation on the hourly time frame, I mentioned this before in my previous video that we will not reach 115 precisely, that the market will start to liquidate positions even before. It may happen at 115.20 or 115.10, 115.15. So it actually happened starting from 115.23. And we saw actually even the price action in the beginning of the Asian session. We see those bullish candles and the really a strong movement on the euro dollar. And yesterday we also saw this initial appreciation of the US dollar and this correction, but then we saw the continuation of this trend. So in my opinion, the situation is getting more mixed. In my opinion, probably the bias of the US dollar is over at the moment, and we are likely to see consolidation in the wide range. I would like to highlight a few important levels. First of all, I would like to draw the level for today's session. In my opinion, we're likely to stay approximately in this type of trading range. So we're likely to move in, potentially it can actually happen in both directions. We can move slightly lower, but in my opinion, the markets will be very hesitant to buy dollars. Probably many traders will lose their confidence in the US dollar after the sharp reversal. So we're likely to have some further correction in this currency pair. The best trading strategy would be to consider shorts or even longs from important technical levels. This is the only thing that can act as a reliable trading signal. One of those levels can be, let me draw this, it's the level 116.40. So in my opinion, this level is going to be pretty important. Another level is 116.60. So those two levels are potentially, this area inside can be a potentially good opportunity to open a short position. In this case, we could consider placing the stop loss above 116.70. So in case if we move much higher, in my opinion, it will not happen today, but it may happen by the end of the week or probably next week. So in case if we move to this area, probably the market will start considering shorts again. So this would be the interesting area. But before this, I think wait and see is the best strategy. I don't see any potential opportunities right now. I would like to remind you that flat position is the best position in the market. It doesn't involve any risk. Sometimes you just need to wait when the market dust will settle down and you will see a much better vision of the market. So in my opinion, waiting is probably the best strategy in the given environment. So in case if we return back to those levels till 116.60, we can potentially consider opening short positions on euro dollar. So that's my vision on the markets and on this currency pair in particular. So that's it for today. I hope you enjoyed this video. Please give us your thumb ups and subscribe to the channel. We really provide you all the materials to make you a more successful trader. Thank you for watching, and I wish you a nice day.